It's Matt with earningselite.com. Thanks so much for tuning in. Today we're going to talk about a trading strategy you can use for TQQQ using 2 time frames and 3 exponential moving averages. That's an 11 EMA, a 20 EMA, and a 40 EMA. And again, if you're enjoying some of the content we're providing, please do subscribe to the channel. You can also head over to our website, earningselite.com, pick up our free monthly newsletter as well as the lower risk entry alerts that we send out to subscribers. And we just released the fall 2023 trading playbook as well. So that's earningselite.com. Up on the screen here, we've got 2 time frames. The one on the left is a 2-bar per day chart, and the one on the right is a 5-bar per day chart. And on the left-hand side of the screen, on the larger time frame, we've got a ratio that I would suggest if your software offers, like TradingView, for example, make sure you have this up. It is the comparison ratio between TQQQ and a stock market representation ticker of your choice. In this particular case, we're going to use VTI. You can use the SPY. So we're going to use VTI because it's just a broader market overview, broader market ETF than SPY in our opinion. So we're going to be comparing the performance between the two. And what you'll see is, let me just mark this so you can understand what I'm talking about. Basically right now the buy signal is off given the fact that, for a number of reasons, but given the fact that the ratio, the line of TQQ in comparison to VTI is pointing downwards, indicating a risk-off environment at the very present moment on a larger time frame on the 2-bar chart per day. And we also have our moving averages that are also all pointing in the southeasterly direction. The 20 has just started to roll over. The 40, you can argue has also just started to roll over. We also had a gap down, I believe, in the opening of today's bar. So there is no buy signal on the larger time frame for us that we're going to be interested in looking at, meaning that we're not going to be interested in looking at the lower time frames just yet, maybe another couple weeks or so, but we're going to be looking for lower risk entries. We're trying to swing trade this for longer than 2 or 3 days. That's the idea behind using this system that we're giving you. Sure, you could use an Elliott wave system to kind of catch one of these swings up and down. Right here on the 25th, you absolutely could have entered using Elliott wave to catch this upside swing, but what we really want to do is sort of enter when it's kind of a sleep at night kind of entry where it's low stress, lower risk of loss of capital, and we're going to do this by paying attention to the higher time frames. On the lower time frames, your signals do blossom from there, but the higher time frames are going to give you the added evidence and support that what you're seeing on the lower time frames actually are legitimate and are going to stick, so to speak. So we're actually going to start back here on, I think it was just after options expiration week finished out, August 18th or 19th. You had the price in TQQQ capitulate. You had a nice strong volume bar come up and tell you that the sellers were exhausted at this particular point. Buyers rolled in, and you had the market respond accordingly with a nice rally up to about $40 per share, but then a big sell-off. It wasn't really until you got to August 29th where you had all 3 moving averages start to turn up. The 20, the 40 flattened out and started to turn up, and by that time the 11 had already started to turn up as well. So this would have been, if you're a more aggressive trader and wanted to just look for a day or two, this would have been an entry, or excuse me, a point where you wanted to get your buy signal from. Also, you had an outperformance of TQQQ in comparison to VTI on the 29th. So that would have been a place for you to start looking for your entries on the lower time frame. So here we are on the 29th, you hop down and you can see that on the 29th that morning you had a nice strong buy signal upwards. Again, if you want to catch this, because of the fact that all 3 EMAs are heading in the northeasterly direction, they're all heading up, that would have added weight to the evidence that it would have been an acceptable entry. You're chasing a bit, you are chasing price there a bit, so it is getting higher risk the longer you wait to get into this entry. But you had to cross over the PPO, the center line here. Everything looks good for an entry and a quick few percentage rise to the upside. But then as you were up here, you would have noticed that the PPO started to turn over, okay, and as well as price starting to climb. Okay, price action, not necessarily the closing prices, but price action gave you a divergence there. And that would have indicated that your risk for holding or even entering certainly here would have been very high risk, given the fact that you lost your momentum. So you're going to be looking for your higher time frame entry. Also, just as a side note, what you can see is as you were here on the 20, I think it was the 20, excuse me, to September 4th or 5th, you started to have the EMAs on the larger time frame turn over. The 11 started to turn over, the 20 flattened out, and then you had that down bar. So the buy signal got turned off on the morning of September 6th. Added to the fact that we are going into a seasonally underperforming time of the year, that doesn't help with these signals as well. It's an added signal that works against finding an entry. We also have that, like I mentioned, an underperformance of TQQ in comparison to the stock market, indicating it's currently a risk-off environment. So the bottom line is that what you want to do is first take your EMAs. You want these on the larger time frame to start to curl upwards or flatten out, especially on the 20 and the 40, and you want this 11 to start to curl upwards, and that would most likely happen due to the fact that this dips down and comes up and starts to pierce back above the 20 and 40. At that particular time, you want to be looking on the lower time frames for an entry where the price gets in between a rising 20 and 40 EMA, or have that 11 EMA on the 11 period EMA come and touch down on the 20. Price might pierce into it, but nonetheless you want these EMAs to be heading the right direction. You want them to dip into that kind of value zone, I think as Alexander Elder put it, between your two moving averages, and that gives you obviously a signal, or rather a trigger, to go long, as long as the higher time frame is in agreement with you. As long as the higher time frame EMAs are pointing in the northeasterly direction and going upwards. You also want to see, obviously, TQQQ outperforming VTI, meaning it's a risk-on environment. So I hope that quick video on how to use the EMAs and the performance ratio between TQQQ and VTI helps. So do be careful out there. Happy trading and happy fall.